Yo, what's good everybody? So in this video we're going to be going over how to use Fibonacci and how to incorporate Fibonacci into your trading strategy. Alright, what's good everybody? So pretty much I haven't made a YouTube video in quite some time. I was going over my channel and I want to definitely drop more trading content. I feel like I've been getting a little unbalanced in terms of like my lifestyle videos and then my actual trading content, because at the end of the day all this happened because of trading, and I want to start making more trading content to help you guys out as much as possible. So when it comes down to this video, we have some key elements that we need to understand. When it comes down to Fibonacci, Fibonacci is not a mystical magical tool that will all of a sudden make you a profitable trader. Again, trading is a combination of a lot of things, and this is just another simple price action tool. Now, I don't use Fibonacci in my everyday trading strategy, but I do use it from time to time when it is right to actually use it. So last but not least, let's get right into it. All right, everybody. So before we officially get into the video, I want everybody to take out a paper, a pen, or their notebook, whatever you guys use to take notes. Take as many notes as possible. I mean, the video is always going to be here, so you can always come back, but it's good to physically write down what you're trying to learn, so then obviously you can go back to it later and kind of read it in your own version. But again, the video is always going to be here, so there's going to be a few key things that I want to talk about before we actually get started. But before anything, these are kind of my Fibonacci settings. So the Fibonacci tool can be located over here in your TradingView toolbar. Fibonacci Retracement, you could add it to your favorites. So here's my Fibonacci Retracement tool. This is what my tool looks like. I'm gonna go to settings so you guys can copy my settings here. So these are the levels. So we have the 0, the 38.20, the 61.80, 100%. Then we have our extension levels here as well. And then we have the 50%. So the main levels we're going to focus on are these three. That's why I only have these three levels. Now, again, before we get into the video, Fibonacci retracement isn't just some mystical magical tool that again will tell you or will make you a profitable trader. This tool alone will not make you a profitable trader. Again, it is simply just a tool that we have within our toolbox to help us increase the probability of what price is trying to tell us in terms of where price could head next. Again, you want to adopt a probabilities mindset, right? Now, before anything else, this tool only works in a trending condition. So if the market or if price isn't in a trending condition, this tool will not work. This tool will not work in a consolidation range such as this one. Price has to be making, again, either higher highs and higher lows for this tool to work, or it has to be making lower lows and lower highs for this tool to actually work, right? So now when it comes down to our Fibonacci retracement tool, right, the goal for this tool is simple, right? So let's say price is in a trending condition and you're trying to figure out where price can have a pullback to so you can actually get in on the trend and potentially make some money. Let's just say this is an area of supply and demand, or this is an order block that you see that price potentially could come down to. In this situation, you're going to use your Fib tool from a point A to a point B to look to continue where you could potentially buy. Now, you see that the 50% is within the supply and demand zone, right? So what you're doing at this point in time is you're building confluence. You're starting to add the probabilities to your favor. So let's just say price actually comes down to your 50%, right? And at this point in time, there's many ways you could trade this, but something I forgot to actually mention is that the Fibonacci retracement tool simply, let me go back to gold. The Fibonacci retracement tool is simply used to measure the retracement. So within a trend, right, you're going to have retracements, then you're going to have extensions. Again, and it's rinse and repeat. Simple as that. You're going to have retracements, and then you're going to have extensions. So what I'm going to do is I'm going to keep the extensions in red, and I'm going to make the retracements in black. So your Fib tools can be used to try and measure both, right? But really the tool itself, the Fibonacci retracement tool itself, it's literally in the name, is used to measure the retracement. Now, we're not trying to also predict where price could potentially bounce off from. Simply what we're trying to do is measure the retracement of price and how far price has to actually pull back in order for us to look to take a position within this trend. Now, typically when it comes to my trading, I like to see price at least pull back to the 38.20, in between the 38.20 and the 61.8 for me to actually take a long position, because that's a significant enough pullback for me. You want to think about these pullbacks as like discounts to try and get in on the position. So the more price pulls back, the better you have a chance at decreasing your risk while increasing your reward. Now, with that being said as well, like I feel like there's so many topics I could cover just with Fibonacci retracements, you know, the pros and the cons, but I want to keep this video as simple as possible. This tool is simply only used to measure the retracement. So obviously, if price was up here and it came down to the 50%, it retraced 50% from the original extension to the upside, right? Now, we have our retracement levels being the 38.20, the 50%, the 618, and the 100%. And then we have our extension levels. These are our levels where we could use for targets, and we could also use these levels to try and measure where the next extension may go to, right? Because we're looking for price to extend higher in a bullish trend, and we're looking for price to extend lower in a bearish trend. So back to this example. Let's just say price is in a bullish trend and you see the 50% here lining up with your supply and demand zone. Does that mean once price hits the 38.20 you're going to look to buy? No. Why? Because we're building confluence, and we see that if price comes down to this area, we have a higher probability of bouncing off this area than this area. Why? Because of the extra added confluence. Again, so we're pretty much what we're doing here with, you know, Fibonacci, support and resistance, our price action signals, is we're building an edge, and we want the best edge possible for every trade to increase our odds of winning that specific trade, to increase the probability of that trade, right? So when you as a trader are hopping on the market, just know that the Fibonacci retracement tool itself won't work by itself, right? Again, you need to be in a trending condition. Now, everybody's going to trade fibs very differently. For me, what I like to do is I like to wait for rejection of that specific level. I know some people, they use limit orders at the fib levels, but personally, I rather wait for an actual rejection. It doesn't have to be an engulfing candlestick, but I like to see rejections off these levels. Now, I'm not going to get too far or too deep into it. For those of you who are enrolled in the online course, then you know that would be a further deeper explanation of how I trade the Fibonacci retracement tool when I do use it. But now let's just say price came back into our area of support and resistance, right? So let's leave it as we're actually going to start writing off these confirmations. So confirmation number one, we've pulled back to a level of supply and demand. Confirmation number two, we're at 50% on fibs. And then you can add a third confirmation, like let's just say you know, you have a bearish engulfing candlestick followed up by a bullish engulfing candlestick, right? That could be your third confirmation here. So confirmation number three, we have an engulfing candle, and let's just say the moving averages are blue over red, meaning we're continuing to look to buy, right? So what we did here is we build a case. We built a case study on why we're looking to go long. Now, again, we see a higher probability of going long because we have more confirmation for price to go long than price to go short. And simply all we did was use this tool as added confluence, and that's how you should use this tool. And then what you could do in a situation like this, like let's say you have your entry signal right here, you're going to enter there. You're going to place your stop loss. Really, at the end of the day, it's very discretionary for every trader. Some people may place it right under the level they purchased at. Me personally, in a situation like this one, I'm going to place it under the 618 just to give it a little room to breathe, just in case. Just because you know, just remember, just because it hit the 50% and it started rejecting off the 50% doesn't mean that it will go up. Again, we have a higher probability of going up, but what you're gonna see happen sometimes is price come down maybe to the next level and then bounce off from there, right? So I like to, if my entry is at the 50%, I like to put my stops under the 618. If my entry is at the 38.20, I like to put my stops under the 50. Very, very simple. And let's just say, you know, your TP1 is going to be at the original highs for a 1-to-1, and if price hits your TP1, you're going to move your stops to break even and try and throw your stops to our TP2, which again would be an extension higher, and then a TP3, which would be an extension even higher than that, right? So that was a quick the Hispanic was coming out of me. That was a quick little brief explanation of how the tool works. Now let's actually implement the tool, right? So notice how gold at this point in time was actually in a consolidation range right here, right? So once price actually broke out of this consolidation range, price formed new lows. At that point in time, you can expect for price to actually start trending because we made new lows. Now, after new lows have been made, you're going to expect, again, for price to make that high, which is a lower high, which in this situation happened here. How I place my fib tool and how you should place your fib tool is from the highest point before the breakout, which was right here, to the lowest point of the breakout. Now, as you can see, not everything is going to be so crystal clear perfect. This would be a 78.6% retracement roughly, but not everything is going to be so perfect. But notice initially how price did come up, and then we have this first engulfing candlestick signal. This would be a signal for you to potentially go long. Now again, we're not taking a trade here. We're not taking a trade here because price didn't test the 38.20 to the T. Right now, when I'm being very specific with that, I'm being very specific with the level. Price actually has to test the level itself. Also, what you could notice from this specific pattern is that we have our first entry signal here, and then we have what happened over here, right? This is a level of resistance, which price went above and then closed right back under, making that level of resistance still valid. And then we have, yet again, another entry signal here. Everyone's going to take this entry very, very differently. Some people may have taken the entry signal here because in hindsight, you would have been like, no, I would have waited for, you know, the initial breakout. Well, to me, this is a pretty clear, you know, clear as day double top pattern, nice engulfing candlestick pattern, right? Again, everyone's going to place their stop loss very differently here. So really quick explanation. So let's just close that. And you can actually see after that obviously price went down. It actually went all the way to the extension level. Notice also how price ended up breaking under our zero, the low, and then pulling back, retesting, and then continuing to go down. You know, again, that's another trade confirmation there as well. Notice how it hit our extension level for the negative 27, literally to the pip, and then started to retrace. So once price actually breaks under the zero, then price has already formed a new lower low. At this point in time, this is when you're going to start adjusting your fibs. Now, this is your confirmed lower high, and this is your lower low. Notice how price pulled back but didn't hit the 38.20. It's not valid. We're going to move it down again. Now, at this point in time, price did pull back, right? Now, again, here you have another example. Price pulled back all the way just in between the 50 and 618%, right? But then price ended up coming down. Big engulfing candlestick closed under the 50%. Again, everyone's going to trade this very differently. I don't know why I grabbed the long position. Everyone's going to trade this very differently. No, this is not normally how I trade it, but I'm just kind of giving you guys an example. So I'm going to put my stops under the 618, and my first TP is going to be this 0 on the fib for about 2.5 times my risk. My TP2 could be down here, and then TP3 could be all the way down here for about 6 times my risk. So in a situation like this, you're risking 170 pips to gain roughly 1,240 pips, roughly, right? Now, 1,240 pips, 1,025 pips, right? So now when it comes down to gold, and you know, different currency pairs. Each pair is going to move very differently. Each pair is going to trend very differently. I just kind of wanted to give you guys the example on how to actually use fibs and place fibs. And again, this is the example for a bearish condition. Now that price had made a new lower low again, right? Notice the market structure here: lower low, lower high, lower low, lower high, right? We're simply just going to be adjusting our fib tool. This is now our new lower high since price made a lower low. Notice the pullback to the 38.20 and notice the immediate rejection, and then, you know, notice how price kind of just went all the way to the downside there. And again, once price breaks to zero, you have a new lower low. So this is our lower low, lower high. This is our lower low, right? Price pulled back to the 618 at this point in time, engulfing. Again, rinse and repeat, right? Stops there. Target 1's here, target 2, target 3, right? And then simple, right? This is the new lower high because price broke the zero, made a lower low. Then you're gonna pull it from here to here. Notice again, this was our zero on fib. Once price actually broke through that, you have a new lower low and you can start adjusting your fib. So price pulled back all the way to the 50% and then continued to go down, made a new lower low. So we move our fib from there to there. We place a zero at the low, and then at this point in time, price retraced all the way up to 100%. And once it broke above 100%, that's it. That trend is over. That trend is no longer valid because price broke market structure. Notice the break and the retest and then the move up, right? And then all you got to do now in this situation is flip your fib. Point A, point B. Notice how price pulled back to the 618 and then made new highs. Pretty simple. So hopefully you guys did understand this video. Again, this video was just to kind of break down how to actually use the Fibonacci retracement tool, and I'll talk to everybody in the next one. Peace out, guys.